Folks, how's it going today? Today we're talking about the worst NAV eroding covered call ETFs in the market. This is my list. You might think differently on it, but this is the list that I think are the weakest players in the covered call space from a NAV erosion standpoint. I'm not going to try and pick on YieldMax too much, but definitely I'm going to be picking on YieldMax among some other ones. So let's jump into it. Okay, guys, the first weakest ETF on the list, the ones with the highest NAV erosion, I'm putting up QYLD, okay? QYLD, which is the Global X NASDAQ 100 covered call ETF. And you can see it has declined 24% in terms of price appreciation over the past 5 years. It has a pretty high expense ratio as well, decent dividend return, but that price depreciation, that negative price over the past 5 years is something that is not to be desired, okay? Especially in comparing this one to like a QQQI or a JETB, or rather JEPQ. This one is much weaker. You can see its total return since inception has been 8%, 7.6%, which is well below some of the other players in the market. Yes, this one has been out for a little bit longer, but still, the NASDAQ has been on a bull run, right? Through 2020 to 2025 effectively. Yes, we've had a couple of down spikes, but generally speaking, the NASDAQ has been really, really strong. So I'm wondering really what is causing such a downdraft with QYLD. And a lot of people talk about this one because maybe it's more of a legacy, but really I'm not impressed with QYLD. I'm not really impressed with Global X entirely. I think you're much better off with your Neoses of the world or Goldman Sachs or even JP Morgan. Next up, we got our friends still at Global X with the Russell 2000 covered call ETF, RYLD. Okay, this has done negative 40% since inception. Okay, negative 40% since 2019. This one does a 12% yield, high expense ratio. Since the fund's inception, it's only averaged about 3 to 4% per year. So also from Global X, I'm not impressed by it. I haven't checked out the underlying index per se, but ultimately, I'm not impressed with this, not impressed with Global X. I think there's other places to find better opportunities. Next up, I'm going to start picking on, unfortunately, YieldMax a bit. And we're going to start with Tesla, which has lost 80% of its value since inception, since 2022. 80%, folks. Not only that, it has a 1% expense ratio. It does have a very high dividend yield, but 80%. So now what's going to happen here is you're going to constantly be getting weaker and weaker and weaker distributions with the downdraw of its NAV, net asset value, okay? And this is what we're talking about. The net asset value is effectively being its price. It's something we're looking out for. And while with Tesla, the average annual return has been 8%. And some years have been really good from a price standpoint. Overall, it's been pretty weak. Overall, 8% annually, you can find better opportunities. Plus, like I said, its dividend payouts, started, at $2 a share, right? Look at what it's doing now, 30 cents a share, 38 cents a share, weakest ever, and it's going to continue to see that down draw. So, it's going to continue to pay out weaker payouts while drawing down on your price, your NAV. And so, yes, a lot of these have the underlying asset problem, but Tesla, not excited about it, not even the slightest. And again, like I said, a lot of these have their underlying assets are not doing as well, but in correlation, these are not going to do well. So still, they're not good to look at and not good to have on the books. The next one is going to be our MRNY, which I believe is Moderna. Okay, it's the Moderna underlying ETF. From YieldMax again, let's look at the total down draw here. We have a negative 91% down draw, negative 91% for this ETF. It started at about $23, $19 to $23, and in its inception, it's all the way down now to $1.80 Yes, it has a strong dividend yield, but since inception, the average annual return has been negative 49%. Of course, Moderna is not doing so hot as a stock, but you're still better off probably owning the underlying asset versus this, right? And don't get excited by these high dividend yields. Don't get excited by that because the overall return super negative. Year to date, it's down 65%. Average annual return has been 49%. No good. Another one we're gonna look at. Another one, MARO. It's called MARO, which is the YieldMax MARO income strategy, down 62% for all time. What do we got here? A very high expense ratio. The total return since inception, gotta refresh the page. Total return since inception, negative 42%. Year to date, negative 11%. Past month, negative 7.7%. Nothing to be excited about with this one. High dividend yield, don't get excited about it. Skip it. Skip it, skip it, skip it. Next up, what we got? All right, we got the crude oil covered call ETF, USOI, okay? Down 28% since inception. Has a high dividend yield, but since its inception, the average return has been negative 1%. Not impressed with this. High expense ratio. You know, if you're into crude oil, like buy crude oil, man. Don't go for this yield chaser on this. I don't think this will appreciate. I'm not excited about it. Nothing really good here, but you know, if you're interested in this type of thing, to yield chase, you know, be my guest. Another one in the AI space, the YieldMax AI option income strategy. Okay, this one captures income from AI stocks. This one down 85% since inception. 85%. Yes, it has a high dividend, but it's down 85%. The expense ratio is insanely high at 1.67%. So high. I don't know why it's so high on this relative to the others they have on the books. The average total return over the past year has been negative 42%, and average annual return since inception has been negative 37%. I know I'm picking on YieldMax, but guys, we got to be careful and evaluate these and consider them. And you know, just because it has a high dividend yield, just don't yield chase, man. Look at the total return and look at the NAV, the net asset value, the price, effectively the price of the asset. Okay. I got two more. That's it. PayPal. What do we got here? Total return, negative 43%. Very high expense ratio. Don't even worry about the dividend yield. The average annual return has been okay at 13%. But again, you know, look at the dividend payouts here. You know, it started at 62 cents a share, and now we're down to 34 cents a share. So every single payout now, it's going to get weaker and weaker and weaker. That's not what you want when it comes to income. You want consistent, stable income so it's predictable. Okay, that's not what we have here. And I have one more. This isn't really a long-term hold. You know, maybe you're using this as a sort of strategic hold, but the YieldMax short coin option income strategy. Okay, this one, it's a short position. It is a covered call strategy though. This one is down 84% since inception. Crazy high dividend yield. Not a good expense ratio, but since inception, it's been down 50%. Average annual return has been down 50%. Total return for the past year is negative 57%. Okay, I know it's a short style. It's an inverse position type of idea. Maybe you hold it for particular periods, but I don't really understand why someone who has a short income strategy. To me, like, you know, maybe someone explain it to me down below in the comments, but I don't know why really you'd want to hold this. You know, you might as well just buy Coinbase or inverse Coinbase if you want to. Yeah, I mean, for me, it's a unique strategy of doing a short plus covered call. It's weird. You know, and again, so we started off at the beginning of this ETF at $1.89 a share. in terms of payout, and now it's at 26 cents a share. So not exciting at all. In fact, it had the worst payout in July of 13 cents. So not exciting, very dangerous. Yeah, so that's the list, guys. I tried to be objective to not only do YieldMax, but certainly YieldMax has a lot of culprits. But let me know what you think. Okay, guys, so that's the list for the worst NAV eroding culprits. And at least it's my list, but if you have any others that you want to call out, leave them in the comments below. Or if you like these ETFs, tell me why in the comments below. Also subscribe to the channel if you like the content. Outside of that, guys, all the best and cheers.